Good morning, traders and investors. I hope everyone's doing great today. It's December 23rd. It's a day before Christmas Eve. The markets are cooling off just a little bit, getting ready for the holidays. Liquidity is getting a little lower. The sentiment, we just announced that a $900 billion bill is going to be released, but Trump is threatening a drama again. Overnight, futures are slightly up, but again, I'm not expecting a lot of trading action leading up to Christmas. Usually the night before Christmas, Christmas Eve, the market cools off. Now, futures are mixed. We've been very, very choppy, and the market has been cooling off a bit. I think it's going to continue, especially if this new strain of COVID from Britain continues on its wild, wild journey of destruction. But God only knows if that's going to happen. We got to deal with what's on the table right now. So futures are slightly higher. The Dow's up about 49 points, not really anything major. It can go either way. And more likely than not, it's not going to go anyway because we're in a holiday season right now. As far as global data, we've got big data today. We've got jobless claims. That's coming out in about 28 minutes. We got new home sales, and we got consumer sentiment. By the end of today, we're going to have a good idea of how the housing market's doing and how consumer sentiment is doing. Now, yesterday's consumer confidence report was on the light side. It wasn't that great, okay? And the existing home sales report suggests for the first time since this COVID started that home sales may be cooling off as well. So there is some evidence that the economy is cooling off, and that $1,200 check in the first stimulus that America got a while back isn't really doing it anymore. And this new one, I don't know, it's just not that hot, and the market's not reacting to it. And if jobless claims confirms what we saw last week, that the number's going up to about 900,000 per week, new claims, that's going to be very, very negative. Now, let's just quickly look at what the expectation is. Yeah, 875,000. See, the moving average is 812,000 new claims per week. It went down to, it dipped its toe in the water in the 600,000 range, and then it went back up, and now it's almost at 900,000. And if this number goes to 900,000 or above 900,000, which is the high range, it's not going to be pretty. Last was 885. I'm hoping it's going to go 875, 865. I'm just hoping the number's going to go down and not up from 885. Let's keep our fingers and toes crossed. Now, as far as global economy and global data, let me go through the highlights for you. Global markets were a little higher after President Trump suggested he may veto the $900 billion economic plan. London, Europe, light trading ahead of the Christmas holidays. Very typical, nothing strange there. Overnight, benchmark index was kind of flat after Trump criticized the aid plan approved by Congress. To be honest with you, it is kind of light. I'm not really seeing anything major from this plan, and the markets are not loving it. And I'm going to tell you another thing. $600 is not going to go very far in this type of economy. It's not going to go to help consumer discretionary like the $1,200 did. He urged lawmakers to raise payments to the public. I agree with him. Meanwhile, investors' nerves were rattled by the emergencies of a new COVID variant in Britain that spreads more easily. That's what I'm afraid of. And remember, we don't have the drugs in America to treat healthy working people for another 3 or 4 months. Yes, we have it here, but for first-line responders, for people who have severe medical conditions, healthy people are not going to get treated with this vaccine, or given vaccine, not treated, given the vaccine, for another 3 to 4 or 5 months. Where's that going to put the first quarter of 2021? That's bad. Retail sales are going down. I'm just being realistic here. So this is very, very bad. Prompted 40 governments to ban travel from Britain. Here we go again, just as I predicted. And I was hoping I was going to be wrong on this one. Investors are hoping the aid package approved by Congress after months of wrangling can prop up economy until the rollout of the vaccine. That's what I was saying. It's like you've got the madman behind the machine here with the bombs, and then you have the guy here to rescue James Bond to rescue the day. And it's kind of like, who comes first? Is it the madman pressing the button, or is it the guy to save and disarm the nuclear weapons? That's kind of where we're at right now with this COVID. I'm not kidding. I'm not kidding. Is it going to impact the world so bad that the next quarter is going to be completely shot like the first quarter of of this year. I'm still thinking this all started last year, but we're still in 2020. So we are in a kind of like it's an interesting scenario, really. All right, the plan approved Monday would send $600 to most Americans, giving $300 per week to the unemployed and deliver other aid to businesses. I don't think that's going to cut it. I really don't. And investors are hoping the aid package approved by Congress after months of wrangling can prop up the economy until the roll of the COVID vaccine can roll out. And again, consumer confidence is not pretty. Wednesday, World Bank said it expects China economy to grow by 2% this year over 2019. That's really great. And to accelerate to 7.9% in 2021. China is the only major economy to track growth this year, while activity in the US, Europe, and Japan shrank. That's because they were putting bleach in the beginning of this year at night, sprinkling it. I mean, they went crazy. And I could tell they're on track because we're getting supplies faster from China, something that we were not getting beginning of this year. So I do believe that their data is being right, irrespective of what they're saying. Consumer confidence fell more than expected this month. That's what I was saying yesterday. And other data yesterday, existing home sales show that hot housing market is slowing. Let me show you that. That's this report right here, consumer confidence and existing home sales. And today we have consumer sentiment, jobless claims, and personal income, and where's the home report? Where's the housing report? New home sales. So you got consumer sentiment, new home sales, personal income, jobless claims, and to a lesser degree, durable goods. So we're going to have a really good understanding of where economy stands right now, especially in light of the last month's activity. Now, as far as stocks, I wanted to show you stocks right now that I'm still liking. Now, these are stocks that I was recommending last March, April, and May. These were my top stay-at-home stocks. And maybe not top, but they were 3 of my top 20 stay-at-home stocks. And they are breaking out right now. Cloudflare. Let me show you this. Look at the last 3 months. Whoop. Look at the last 6 months. Whoop. I was talking about this stock March, April, and May of this year. It has gone up, it was somewhere around 40. Now it's around 80. It has doubled, and I'm still seeing upside. This company helps internet properties load faster. It's a serving platform. It helps, in other words, if I have a website built in America and somebody in China is trying to access it, and the servers in Chicago, for example, it's gonna give mirrors of my site throughout the world. I use this program, this service. It's a software as a service platform, and it's very big for websites. And so I like Net. I still like it right now. The next stock I like, Roku. What was I telling you about Roku about 7 months ago, 6 months ago? I told you it was a buy. It's a hot stock. People are watching television more than ever. We were talking about it around 140. It's now at 350. The company has gone up about 200 points since I recommended it, and I still believe it's going to go higher. Roku, people are, what's one thing about Roku, they made deals with certain television manufacturers. So Roku goes in the TV. TCL TVs, other TVs, they're doing this, and it's simple. The remote is small. I have a Roku TV. This thing is hot, and it's causing people who don't know how to use all these different buttons on TVs to be able to pretty much watch what they want. Roku is awesome. And by the way, if you don't have a TCL TV, check it out. I used to buy Sony and Toshiba. Now I just buy TCL TVs. They cost half the price, and they work just as well, and they make tubes for most manufacturers. You can buy them at Target for like half the price, like a big 60, 70-inch TV for like $400, $500, $600. It's crazy. So I like Roku quite a bit. And last one, Square. I hate to say I told you so, but if you look at my videos, I said payment processors. People are going to be buying things online. Payment processors make money. When I talked about this stock, it was around 75. Now it's around 240. And I still think this stock has a lot more upside going into 2021. These are not large cap stocks. Net, Roku, Square, they have a lot more growth potential. And if we have this resurgence of the stay-at-home environment like I think we're going to have, we may have a problem in our hands. And if we do, these stocks are resilient and they're disruptive. But I do believe, all in all, I do believe after this little rut is over, I think we're going to go higher. I think we just need to have this little cloud lift over our head. And folks, I'm going to tell you, I know it sounds counterintuitive, but during this COVID period, a lot of stocks that typically don't go up have been going up because of the environment we are in. And I believe we're going to have an amazing environment to find specific disruptive tech stocks and consumer stocks and retail stocks in 2021. So I want you to pay attention to what I've got to tell you today. Overall, keep the next few days. I'm not expecting a lot of drama from the stock market, but it's because we're in the holidays. But after that, all bets are off. Now, folks, I got something big for you, something important. Pay attention. The media buzzing about Congress's $900 billion stimulus package and what it could mean for the U.S. economy and the stock market. And I'm telling you, folks, we can see other moves like on these three stocks. These stocks, they ran over 100, they more than doubled over the last year. Anytime big news like this breaks, it can potentially, it really has the potential to impact the stock market and cause major volatility. And this announcement could not come at a more tenuous time. I've been warning my readers for weeks literally, about the broader index looking overly stretched out, meaning they could snap back at any moment. You guys know what I'm talking about. We're not saying this is going to be the catalyst that shakes the market, but it doesn't hurt to start preparing now for a changing climate. Folks, I'm telling you, to help you get started, I've teamed up with Wealth Press's Tom Busby to bring you timely training seminar. In it, we'll show you how to spot stocks set to climb regardless of headlines, news, or market volatility. Tom and I are going to show you how to profit from the current market, what to expect in 21, where the risks are, where the pitfalls are, where you can gain an unfair advantage, what the key levels are, literally the top stocks, weakest stocks, how to gauge the best stocks, how to find them yourself, how we can help you find them. Because I want you to find stocks like Square, where we entered, or we gave the alert around 80, and now it's at 240, or Roku, where we talked about it, buying it around 170, now it's at 350, or Cloudflare. I always say Net, but it's Cloudflare. We were talking about it at 30, 40, 50, and it's now at 86. Folks, you have to check this out. Tom and I have been really red hot. Well, Tom's been red hot for the last 20 years. Click the button below to see what Tom and I have prepared for you. You need this right now. This is a turning point for the market. We are at a crest of a tidal wave. You need to be prepared. You need to know if the money's going into small caps or large caps, if the money's flowing into techs or consumer discretionary, if basic material is going to go higher or lower. There are ways in 2021 to profit from the market, in my opinion, of course. I'm always bullish, right? But no, seriously, all jokes aside, I want you to be prepared to take advantage of this market in 2021. Tom and I have been working countless hours to help you gain this advantage. Follow the link below, sign up, do it now, and have a great day. And post some comments from here. I want to know how you guys are doing during the holidays, and I want to know if these videos are helping you. Post feedback for me. Have a great, great day. Bye. And by the way, I'm in Miami. Take a look at this view here I've got. Pretty cool, right? All right. I'll talk to you guys later. Bye.